Welcome back, everyone. In today's video, we're going to talk about a PayPal stock is going to make me $1 million. And better yet, is it going to make you $1 million? Or, as Dr. Evil would say, $1 million. Let's find out. So yeah, before we get started, shout out to like and subscribe. Oh, also, at the end of this video, I have my DCF valuation on PayPal. So make sure you stick around for that. It's a can't miss. Okay, so for PayPal, it's currently trading at $66.67. Market cap, $71.45 billion with a PE of 17.36. That is a PE for a company priced for bankruptcy. That is extremely low. Like the average S&P 500 PE is around 25-ish. So 17 is just it's just horrific. And that's good for us. That's good for us. I'll show you why. And the forward PE is 13.04. So these PEs are extremely low, which means the valuation based off of these metrics is extremely low. Of course, my DCF is later, so then you'll know my full valuation. What I actually think PayPal is worth will be later in this video. But based off these metrics, this is an extremely cheap valuation for PayPal. You have a price per sales of 2.48. Just all these numbers scream cheap. So yeah. Okay, so in my Patreon portfolio, this is my portfolio where Patreon members can view all my transactions in real time. PayPal is one of the holdings in there. This is a smaller portfolio. I have many more holdings in this portfolio other than just PayPal. But yeah, this is a portfolio I started about a year ago. So as you can see, I made a purchase in PayPal in January 8th of 2024. Another purchase in February 5th of 2024, February 20th, and February 27th, 2024. I should buy more. But I've been buying other stocks lately since PayPal is kind of a full position for me at this moment at $14,600. Okay, so yeah, as you can see, so far all these investments are in the green in the short term. Oh, I also have a leap. So yeah, I purchased this leap in March 12th, 2024 at a price of $19.06. Now the thing with leaps is I like to go very, very long on them, as long as I can. So this is a December 18th, 2026 leap at a strike price of $60. So as you can see from the current price, we're already above the strike price. Still below the break-even price, which is $79.60. But honestly, I think we're going to reach that far before December 18th, 2026. You'll see why. Okay, so yeah, there's this article from Mostly Fool, a contributor by Neil Patel. Is PayPal a million maker? And this is where I got the idea for this video. Okay, so he goes on. PayPal is succeeding at increasing transactions per account. The fintech specialist consistently generates lots of free cash flow. The low valuation raises the odds that the shares will perform well. So let's go on. Let's see what he has to say. It's actually a pretty short article, so we're gonna get through this pretty quick. Okay. Oh, can you see Shimao? Maybe. So yeah, while it's easy to get caught up in the stock's recent price action, investors should always focus on the long term. Now this is where I focus. This is where I try to hammer into people. Think long term. Long term. I like to think at least 5 years out, hopefully 10 years out, maybe longer, sometimes 20 years out. For example, I've owned Tesla stock since 2016. So that's quite a long time, especially for a volatile stock like Tesla. So yeah, I always think long term with all of my purchases. And the whole thing is the longer you're holding the stock, the better the stock will reach your perceived valuation, as long as your valuation is accurate. So yeah, as Warren Buffett says, in the short term, the stock market's a voting machine. In the long term, the stock market is a weighing machine. That's very good advice. Okay, continuing. With major indexes in the midst of a raging bull market, it's clear that investors are full of optimism and enthusiasm, but there are still some companies that aren't joining the rally. And this is actually one of the reasons why I started investing in PayPal this year, is because everything else spiked. Barring a couple of other companies, but Nvidia spiked, AMD spiked, a bunch of other companies spiked. What else was there to buy? What else was still cheap? PayPal was still cheap. Take PayPal. It has completely fallen out of favor with the investment community. Its shares sit at 78% below their peak price. Since the start of 2023, at a time when the S&P 500 and Nasdaq Composite have soared, PayPal has dropped 8%. But if we look out over long term, can this fintech stock turn things around and be a millionaire maker? Boosting engagement from the user base. Perhaps one of the reasons that PayPal stock has taken such a beating is because of the company's stagnant user base. As of December 31st, there were 426 million active accounts on the platform. That figure is the same as it was 24 months ago. So the thing about that is that's not necessarily a bad thing, as long as you can increase getting money for those customers on the accounts. For example, Meta, Facebook. They're stagnant. They're not growing user base, yet look at their stock. Look at their performance. It's outstanding, isn't it? Okay, back to the article. So this also points to the intense competition in the digital payments market. A rapidly expanding industry that has lots of long-term potential will definitely invite rivals. To PayPal's credit, it was one of the first major players in this sector. So it has developed a strong brand and scale that helps it defend against competitors. The company's favorable position is illustrated by the total payment volume increasing 13%. Remember what I said before? They're priced for bankruptcy. If you're increasing TPV 13%, are you really going to declare bankruptcy soon? I think not. Year over year to $1.5 trillion in 2023. That figure was 63% higher than the boom during 2020. Because PayPal operates a fee and usage-based business model, the more TPV is, better, since it can lead to higher revenue. And while the user base flatlines, it's extremely encouraging to see transactions per active account rise at a healthy clip. In the past 12 months, the average user transacted 58.7 times on the platform. That's up from 40.9 in 2020. So that is a very good increase. That's quite good. It's like what, 50%? Not a little less than 50%, like 40%. Alex Chris, who was brought on as Chief Executive Officer late last year, has already shown that he's focused on finding innovative ways to drive engagement. Trying to incorporate artificial intelligence is already a priority. Okay, so regarding that, what Alex Chris is doing is these 6 things. Number 1 is a transformed checkout. Number 2 is Fastlane by PayPal. That's so that you can actually transact in just one step. Smart Receipts, which is actually, it's basically offers on the bottom of your digital receipts. You can just, it'll give you AI generated recommendations. You see that, you like it, you click on it, and it leads to more sales. Another one's new advanced offers platform, a reinvented PayPal application, and also introducing enhanced Venmo business profiles, which will boost Venmo there. So those are all good things. Those will increase engagement and stickiness and moat with their existing merchants and customers. So yeah, as you can see in this chart, the 5-year chart on PayPal, that I call this Mount Everest. What do you think? Is that Mount Everest? Oh, and also, what do you think about PayPal stock? Where do you think PayPal will be in 12 months? Let me know in the comments. So yeah, continuing, the business is still extremely profitable. If you looked at PayPal's stock chart during the past 3 years, you would think that this business is on the verge of bankruptcy. He stole my line. But that's just not true. Yes, PayPal carried $11.3 billion of long-term debt on its balance sheet at the end of last year. It also had $17.3 billion of cash, cash equivalents, and investments. That's an obvious sign of fiscally responsible organization. The income statement is even more promising. PayPal generates double-digit operating margins with impressive consistency, and it produces billions of dollars of free cash flow each year. This is a financially sound company that has a long-term staying power, which minimizes risk. On the road to $1 million, hopefully for me and hopefully for you. There might be no better time to scoop up PayPal stock than right now. It trades at a dirt cheap forward price to earnings ratio of 13. That's a huge discount to the S&P 500 and the NASDAQ 100. And it's a clear indication of the pessimism surrounding PayPal and its prospects. There are, of course, two critical factors that can determine if a single stock can help you get to a $1 million position. First, if you're comfortable investing in a bigger dollar amount initially and you have a longer time horizon, then the odds are more stacked in your favor. Nevertheless, it all depends on your bullish conviction. If you believe that PayPal will be a solid investment over the long term, then it certainly makes sense to buy the stock today. So yeah, good article. You should check it out. This is on the Motley Fool. So yeah, moving on, we have Meta, which we just discussed. Yes, I use Bing. Okay, so I'm going to dig a little bit deeper than the article did. So first, let's look at their last quarter's results, their earnings. So total payment volume on the quarter actually increased 15%, which is better than the full year's 13%. So it's actually the growth is accelerating. Again, does this look like a company headed for bankruptcy? Net revenues were up 9%, or actually, let's go to non-GAAP. Net revenues, 9%. Okay, so operating margin grew 39 basis points. Net income grew 13%. And what's important for us? Earnings per diluted share. Let's continue. Earnings per diluted share grew 19%. That's what's beneficial to us. Now, that is a combination of net income of 13% plus massive share buybacks. Now, here's the thing. PayPal generates about $5 billion per year in free cash flow, and most of that goes to share buybacks. Now, let's look at the numbers. PayPal's market capitalization is currently $71.4 billion. If they buy back $5 billion in stock per year, which is roughly what they're doing right now, you can calculate that yourself, just based off the buybacks, how much appreciation PayPal's shares should earn. And that's just from the buybacks. That doesn't include anything else. So that's massive. And that's one of the boldest arguments for PayPal is that huge buyback and the huge percentage of buyback. It's massive. So moving on. We have those numbers, the numbers are just fantastic, and they're growing very fast. And yeah, as you can mention here, actually, yeah, non-GAAP EPS, $5.10. And like I said, most of that goes to buybacks. Okay, so here's my DCF valuation. Tell you what, I'm giving this to you for free. And since this is free, actually, let me hide my face. This way it's really free. Here you go. Here you go. Tell you what, since this is totally free, my gift to you, all I ask is that you like and subscribe to this video. I mean, this took me a lot of work. Okay, dig into the numbers. Revenue growth I have going. Okay, so what I did is I'm assuming that PayPal's Alex Chris's efforts fail totally. That's why the numbers look small, because if he fails, the numbers will be small. If he succeeds, the numbers will be big. That's basically how that works, right? So assuming Alex Chris fails in his 6 innovations, these are my base case numbers. Now, this is basically my worst case scenario for PayPal. So yeah, all I'm asking for, all I am asking for is revenue growth 2024 of 8% to 7%, 7%, 7%, going to 6%, and then going to 5% in 2032. I did this valuation late last year. That's why I sort of caps off at 2032. And it includes 2023. Adjusted EBITDA, I actually just kept it flat at 22.29% of sales, which was what it was the previous quarter. Taxes staying steady at 11.6%. Depreciation and amortization staying at 1.5% of sales. CapEx staying at 2.6% of sales. For unlevered free cash flow, see, the thing is with these piss poor numbers, yes, I'm swearing, maybe. All this happens is free cash flow grows from merely $4.1 billion to $7.1 billion in 10 years. That's like lowballing it. This is like the worst case scenario. And guess what? Even in this absolute worst case baloney scenario, in my opinion, PayPal today is worth $92.98 for a significant upside. It's less than the upside here because obviously this was done a while back, so they're no longer $61 per share, but still a very significant upside. So for me, PayPal is a buy, and I will be buying more stock of PayPal. I'm not sure when because it's a fully built position. I just need to decide when I want to go overweight on PayPal, which should be soon because in my opinion, it's easy money. I'm stealing that phrase from Jeremy from Financial Education. Yes, sorry, I'm stealing it. It's easy money. So yeah, with that said, if you enjoyed this video, please like and subscribe. If you appreciate that this free DCF valuation that I just gave you, just like and subscribe. That's all I ask. Thank you for watching. I'll see you in the next one.